Where do you see the rest of the world developing? Does it become a more fertile ground for investing? And then that age-old question that, sort of all politics aside, is the U.S. falling behind and is actually, sort of more aggressive development helping, happening elsewhere?
So this is the data that we see. So we've invested in 22 countries now. Included in our 68 investments are 15 exchanges. These would be Bitcoin digital currency exchanges covering 42 currency pairs. We're seeing exponential growth in transactional volumes, off of low bases, of course, but they are exponential, in Mexico, India, Philippines, Kenya, Nigeria, Indonesia. And what's similar among all of those different countries are they tend to be kind of the receiving end of remittance corridors. So people paying a lot of fees to send money back home, high mobile penetration rates, and in some cases a currency that is not incredibly stable. And so what we believe is going to be happening is we're going to see those markets emerge where people don't have bank accounts, but they've got a mobile device. If you have a mobile device, you get access to basic financial products. We're now starting to see businesses that are building products and services on top of that infrastructure.
In first world environments where you've got a dramatic and decades-old investment in extant systems that do things and do them reasonably well, if they're oligopolistic, possibly at a higher than they need to be cost, but nonetheless they do them well, they're going to be slow to adopt. They're going to generate antibodies to continue their, keeping their businesses going. In newer developing economies, they don't have those systems. So they're adopting systems.
About a third of our projects are overseas, which for a San Francisco-based technology company in its third year of operations doesn't really make sense. That you wouldn't see that in most traditional enterprise technology companies. You would invest here for 5 years, you'd eventually go overseas. So why is that happening? Well, because where the market infrastructure is less complex, you can move more quickly. That's one reason. And then the second reason are for the reasons I've already mentioned here. I'd also just make a related comment, which is a question that often comes up is it one blockchain to rule them all? Even if it's a private ledger, is it going to be one? And I think what we're finding in our projects is there's not often a compelling logic for there to be one. In other words, securities that are trading in Asia, why would they be on the same blockchain as loyalty points in Europe and for government instruments in South America? It probably doesn't need to be the same set of validators and network operators. So I think you will see essentially an internet of different chains. And I think you'll also see there's a lot of efforts to create a blockchain standard, harmonize efforts, standardize efforts. I think those are important to think about today. But I think the real standardization process, harmonization process, is going to happen down the line when there are multiple networks in the wild operating, and then there's a business reason to connect them, and they're not somehow interoperable already. Then you'll see harmonization, and I think that's the history of most technologies and how they come to market.